Yeah, I want to get started with this. This is actually a PowerPoint presentation that we had put together last year for some newer investors that were joining REsimpli. So we had done a webinar, and we got some really good feedback on it. And what I wanted to do was just cover this, because starting next week, I kind of want to start doing our weekly calls based on this model, just so that everybody kind of expects, has idea of kind of what's going to be coming. So this is basically a next deal model that we had put together with data, marketing, sales, and tracking to help investors kind of understand the 4 pillars of a successful real estate investing in our business. And we noticed that across many investors that are using REsimpli and being very successful, kind of what are the some of the basic things that they're doing. So this is a little bit about myself. I'm the founder and CEO of REsimpli. My name is Sharad Mehta, and I am an active real estate investor in Northwest Indiana, right outside of Chicago, practically a suburb of Chicago, but about 30 to 45 minutes outside of Northwest, out of downtown Chicago is where I do my investing. I've completed over 750 deals, including rental properties for myself, wholesaling, fix and flip. So right now we're doing about 30, 40 deals per year on average. And I own about 50 plus rental properties. And I also own a property management company, all in Northwest Indiana. I've done one deal. I did one big wholesale deal in Phoenix, Arizona, and then a couple of deals in Chicago. But for the last 7, 8 years, pretty much only been doing stuff in Northwest Indiana. And with REsimpli, our mission is to help real estate investors close more deals with less software. And that's why we put together this, 4 pillars of real estate investing, or, what we call next deal model. So getting started with the data part of it, you got to think of successful real estate investing as like a chair or a table with 4 legs. So every single leg is important if you want to have a long-term successful business. So the first one of that is data. So we're just going to go over like what is data, where do we get it, which list you should buy, and how to use it in your business. So basically, when you think of data, it's essentially for us in our business, real estate investor, real estate wholesaling, it's basically a property owner that's looking to sell their property as is. They don't want to list with an agent, and they're willing to sell at a 30% or more discount, and they want a quick transaction. Those are like essentially the main things that you notice across motivated sellers, that you want to have equity. Again, I mean, there's some other creative things you can do. For example, short sale and a couple of other things. But for the most part, majority of kind of what we are doing in our business is we're doing direct to seller marketing, looking to buy properties as is, where the seller doesn't want to list it with an agent, and they're willing to, we want to have at least 30% equity, and they want a quick transaction. That's kind of what we bring to the table. So that's what data is when you think of it at a very broad level. And this is how you can get your data. You can do driving for dollars. You can use list aggregators like ListSource, PropStream. You can get the data from your county records. You can get it from your building department. You can get it from your utility department, like water shut-off notice would be one that you get from your utility department. Building department would be, get your code enforcement list. That's a good one. County records would be tax delinquent, or properties that are going to, behind on taxes, are going to tax sale, your probate and stuff. So that's kind of what data is. Driving for dollar is, a lot of investors starting out use. It's essentially, what it says. You're driving around the neighborhood looking for properties. This is kind of what you're looking for when you're driving around. Tarpaulin roof, any signs of distress is essentially what you're looking at. You're looking at tarpaulin roof, overgrown grass, mailbox, stuffed with newspaper, busted shutters, window units, cars parking garage. So think of it like any properties with any signs of distress is what you're looking for. So that's kind of what you want to, look for. Even if you're using different list, I think this is a good way to just stack your list, especially if you're a local investor in the area. Really recommend it on, just so you have another pain point of, for the motivated seller. So if you guys are not doing that, highly recommend. It's, if you're using REsimpli right now, it's included in all of your accounts for one user. So I would recommend start using it. this is kind of what it looks like. I'm not going to go into more detail with driving for dollars. And then you have, if you're using a list aggregator, for example, like your PropStream or list source, we've used both of them. Essentially, what you're doing is you're starting out with a target city or zip code. So let's say for me, I'm going to pick a market. Let's say I'm going to do Highland, Indiana. That's where our office is. So the next thing I want to make sure is that when I'm looking for properties, that they have 30% or more equity. The reason for that is, you want to have some, that's 30% is going to cover your profit margin, any rehab, depending on the rehab. So typically using a formula of ARV minus, times 70% minus the repair, but minimum, when you're starting out, you want to look for 30% equity. When you're pulling your list from list source or PropStream, the ARV number or the home valuation number is not always accurate. So that's pretty standard where you use 30% more equity. Then you want to look at years of ownership. Minimum, what we do in our market is minimum 5 years. The reason being, somebody who's bought a property in, let's say, last year, you don't want to really target them, even though they might have 100% equity. If they paid cash, then you don't want to go after them because then they might not, they're not going to have motivation to sell. 5 year is a good, ownership number to go after, because typically people have had some life event in 5 year time period where they might want to sell their property. So that's what we look in our market. Owner type, then you can do homeowner or absentee. If you're starting out on a tight budget, I would go after absentee versus homeowner. An absentee, a landlord would have a little bit more motivation to sell their property versus a homeowner, is living in that house. An absentee, also, there are a couple of things you can do. Somebody who owns, hundreds of properties might not be as motivated because, it indicates that they're sophisticated investors, versus somebody who owns 2 or 3 properties might have a little bit more motivation. And then ownership type, you have individual, corporate, trust. We personally, in our business, we don't go after anybody that owns your properties in a corporate or trust. That generally indicates to us that they're a little bit more sophisticated investors. So we're going to have a hard time, buying property from them. So we only go after properties that are owned by individuals. And then vacant houses. Again, if you're using, list tracking REsimpli, it's going to give you that data point of whether the property is vacant or not. And then you're looking for any financial distress. Are they going through a pre-foreclosure, or are they behind on their taxes? Do they have any life event that they're going through, like divorce or probate? So that's where you want to look at more financial distress points. And these are some of the lists that you can get. Like you have your pre-foreclosure filing. So that's happening a lot. We're noticing that pre-foreclosure activity picking up. In last couple of months as the interest rates are going up. So keep that in mind. Probate, if they have other liens, any fire damage properties, are they behind on taxes? Are they going through eviction? Eviction is a good list to go after, especially if the owner has a couple of properties. Then, this might be a headache point for them. Code enforcement issues, stop work orders. Again, these you can get from your building department. Water shut off notice you can get from your utility department. I think one thing to keep in mind is the harder it is to obtain the list, the better it is. Something like 30% equity, 5 years of ownership, absentee list. Anybody can go to list source or PropStream can get that list, and there's going to be a lot of competition. But if you can find list of people, stack your list with pre-foreclosure filing, probate, you're going to have a much more targeted list. Your marketing dollars are going to go much farther versus going after a broader list. So when it comes to data, the thing to keep in mind is the harder it is to obtain a list, the better that list is going to be. And then the next thing you want to do is you want to stack that list. So think of list stacking as, it's combining all your lists that you have. So you pull your list from PropStream, for example, you put it in REsimpli, and then you get a list of pre-foreclosure filing, you get a list of probate, you get a list of people that have code enforcement, eviction. So you take all your lists, put them in a list stacker. Then what that tells you is it helps you identify people that have multiple pain points. So think of every single list that you're pulling as a pain point. So somebody that has everything else being equal, somebody that has a house with 30% equity and they've owned it for 5 years, they might not be as motivated to sell their property versus somebody who has 30% equity, owned it for 5 years, the house is vacant, they're going through pre-foreclosure, they're behind on their taxes, they have a utility shut-off notice, and they have a code enforcement, stop work order. So that's what list stacking does for you, is it helps you identify super targeted lists. And that's the training we're going to go into next week, like help you really identify the properties that you should be going after. But I wanted to do this training to just have a very broad, overview of kind of how we're going to start doing these trainings moving forward. So this is kind of what it looks like. It tells you, whether the property is absentee owned, whether it's vacant, how many lists it's on, how many tags that you have. So it's helping you identify, different motivation points. So again, everything else being equal, you want to go after people that are on multiple marketing lists versus somebody that's on just one marketing list. So think of each marketing list as one motivation point. So the more motivation points that they have, or the more lists they're on, the higher motivation, the more targeted they're going to be to go after. And then what you want to do is, depending on what marketing you're doing, you want to skip trace those owners. So skip tracing is a process of finding out the contact information of the people. It's getting their updated mailing address, getting their phone numbers, getting their email addresses, and then you start marketing to those people. So that's the part about data, like what it is, how to pull it, kind of what you need to do with it, once you have the data. Any questions on this before I move forward? Or we can do Q&A at the end of it. But, if you have any questions, feel free to unmute yourself or put it in the chat. I'm okay either way, like however you kind of guys want to keep it. All right, so the next thing is, once you have all this data that you put, you pull different marketing lists, you stack them, you skip trace them. Now the next question is, so you're done with the data part of your 4 pillars. So 1 pillar is done. You have the data, figured out what list you want to pull, how you want to stack it, and what stack list you want to go after. Next thing is, okay, what do you do with all the data that you have? So that's where the next pillar of marketing. So you start from data, you move on to the marketing. That's where it comes in. The question with marketing is, okay, how will I reach the people that I have on my list? What will I say in my marketing? How do I make my marketing more efficient? So those are the questions you're trying to answer with your marketing. Let me see, there's some question. So Aki has a question, what's a good source for utility shut-off list? Aki, I would go after your water department. You could call the utility department. So for us in our neighborhood, gas and electric is a different company, and versus the water company. Typically in our area, you can put a lien on a property if the water bill is behind. I'm not sure if that's kind of universal across the country, but you can check with the utility company. I would call them and see if there's a way you can get a list of people that are that have a utility shut-off notice. Another good way is, it's like that's the easiest way. That's going to be the fastest way. If that's not an option, I would definitely drive around the neighborhood, use like driving for $2 and see, anytime in our neighborhood, if a neighbor is behind on their, if an owner is behind on their utility bill, or they have some, notice from the city about any violation, they put a sticker, they put a door hanger on the door. So that's another way to kind of, if you see that, those are pretty standard door hangers or stickers. Once you know kind of what they are, you will start identifying them. They definitely stand out. So I would start looking for those. Start with the utility department. If you cannot get that, I would definitely, especially on your very, of your top neighborhood or streets that you really want to go after, I would like make it a point that you're driving down that neighborhood, once a week or once, just make it like a routine, once a week, once every other week. But start with the utility department, water department, and your gas electric department. Cool. Great question. And awesome, man. All right. So once you have the data, the question that you want to answer. So these are the different marketing channels that you can use in your business. These are some of the most, popular or most widely used. You have direct mail, cold calling, SMS, you have your online, which is your SEO, PPC, your pay per lead, then you can do radio ads, TV ads. So these are some of the most common ones that people use in their business. And I put together like a very high level comparison between different marketing channels. So you have kind of the cost, you're going to have your direct mail, which is going to be high cost. Cold calling is going to be medium because, you have the cost to pull the data, skip trace, the software you're using. SMS is going to be low. Cold calling, typically you have somebody on your team that's doing cold calling. Online SEO is going to be low cost. PPC and Google ads are going to be high cost. Radio and TV ads are going to be high cost. So that's your cost comparison. The next thing is whether it's inbound or outbound. So outbound means that you are the one that's initiating the contact with the seller to contact you about the property. Inbound is where the seller is reaching out to you, making the first attempt about a property that they have to sell. So direct mail, cold calling, SEO, you are the one that's reaching out to the seller, whether it's through letter, postcard, calling, or texting. Online SEO, PPC, Google Ads, radio, TV, it's the one where you basically have a broad advertisement, and then the seller is the one that's making initial contact with you. So these are kind of good idea to have inbound, outbound, and the leads timeline. How long does it take from the time you start your marketing for you to start seeing some leads come in? Everything is going to be short term except online SEO. Online SEO is going to take the longest term to start getting leads come in. And then in terms of intrusive, like are you bothering the homeowner? You have cold calling on SMS. Direct mail, I put no. I don't think it's very intrusive, but cold calling can be. SMS 100%. Online SEO, anything with inbound, it's not intrusive because you have the seller that's reaching out to you. And in terms of competition, you're going to notice high competition on cold calling, SEO, SMS, online SEO, PPC, Google Ads, and on your direct mail and radio, TV ads, it's going to be medium competition. Again, it depends on the market, but just generally speaking, this is kind of what you would notice. It's kind of hard to find something that's low competition. So it's something to keep in mind when you're picking a marketing channel. And then in terms of effectiveness, some of this is based on my experience. Some of this is kind of looking at data for other, real estate investors that are using. We're simply talking to other successful investors. One thing I've noticed consistently is that people that are consistently doing deals, they have some sort of direct mail as part of their marketing channel. So it's going to be medium to high depending on your list. So there's other factors that go into it. But assuming you pull your data part, you're pretty confident about, then the direct mail is going to be the consistent revenue channel for you. Cold calling and SMS. Cold calling is going to be medium. SMS I put low, especially as the 10 DLC is going to come into effect, anytime now. I think it's going to be definitely low. Online SEO is going to be medium because you're competing with Google Ads. So, you have the medium, and then, typically homeowner is reaching out to multiple homeowners. Radio and TV can be very effective, again, depending on the market, but it can be pretty effective, kind of what I've talked to other investors on what they're doing in their business. So, and then, with your marketing, what you want to do is you want to be very clear about your intention. If you're sending out a letter or postcard, you want to be very clear. You don't want to have any vague call to action in there. You want to be very clear, hey, you are an investor or you are a cash buyer looking to buy the property, and be transparent about your end goal. That's what we've noticed works the best. If you're trying to if your goal is to wholesale a property and you're sending a letter or postcard saying you're looking to buy a property for your family to live in, owner finds out, especially, in a market, the word spreads really fast. And then you don't want to have that kind of an impression with your, with the homeowners, and then even your competitors in the market, they won't appreciate or respect that. And show them the benefit of working with you. If you're a cash buyer, tell them that, hey, you're going to buy the property as is, no repairs needed to be done. You can close it in 7 to 10 days, at a title company, whatever the benefits are working with you. For us, when we make an offer, we're very clear about, hey, we're looking to buy a property. Our goal is to rehab the property, sell it for a profit. But what we bring to the table is we are a cash buyer. We're going to buy the properties ourselves. We're going to close it in 7 to 10 business days. We're going to close it at a title company. We're going to cover all the closing costs, any back taxes or anything. But of course, we factor that into our purchase price. But we want to make the transaction as clear and simple as possible for the seller. And then make sure you include the phone number and website. Really, really important, especially with the phone number. You want to have a call to action for the seller to contact you. You want to tell them, hey, call or text me. So just be very clear about what do you want the seller to do. You don't want to sell. It's a very simple thing, but you don't want to send somebody a postcard or a letter and then just not like basically tell them what they should do next. So you don't want to tell somebody, hey, I'm looking to buy a house in your market. I can close in 7 days, and then there's nothing. It's, you just have a phone number, but you're not guiding the seller through the process of, okay, call me or text me and I can make you an offer. So you want to make sure you're very clear about that call to action. Steve had a question, can REsimpli send out bulk emails to my buyers list? Yes, Steve, you can do that. And there is, if you go to help.resimpli.com, you can just search email or bulk email and it'll come up. So yeah, so Clint here agrees 100%. Yeah, these are simple things, but you'll be surprised missing these. And sometimes people miss this. They might not think about it, but it's such a simple thing that you want to make sure you're 100% consistently following it. And then kind of this is where, again, going back to list stacking, like this is how everything is, interrelated. It's all connected. So if you're using list stacking, you're going to go after the people that have the highest, most motivation to sell their property. So you want to use list stacking to remove any duplicate, something as simple as, you don't want to go after. So if you have an owner that owns 3 properties in your area, unless you stack the property and remove, anybody with the duplicate mailing addresses, you might end up sending them 3 postcards, to the same mailing address about 3 different properties. It's such a simple thing, but it might make you look not as professional, not as organized if you're sending the same owner, same postcard for 3 different properties. So simple thing to keep in mind. So that's where, list hacking comes in. It helps you kind of who's motivated and, what motivation points. So you want to go after your most stacked list, people that have the highest motivation point. They're on multiple lists. You want to go after them before you go after any other list. So again, these are some key takeaways. Another thing you want to do is you want to go after the marketing type that fits your personality, your budget, and then honestly your lifestyle, right? For me personally, like if I was starting out, I don't feel comfortable calling people on the phone or just cold texting them. So I would not pick that. That's just my personality. There's a lot of people crushing it with cold calling and SMS. Just my personally, I would not start out with that. For me, I'm an introvert person. So for me, like doing direct mail or PPC just works perfect for kind of what I want to start. We do cold calling in our business, but then I have somebody that does that. So you want to, you don't want to just copy what somebody else is doing if you don't feel comfortable with it. Somebody might be really doing well with direct mail, for example, but if you don't have the budget, then don't start with that. Start with something that, fits your comfort level, that's in your comfort zone, and then you can, expand from there. This is a question that we get asked a lot: which marketing should I use? Our answer is always the same: choose the marketing channel that you can stick with the longest. It doesn't matter. Every marketing channel gives you ROI if you do it consistently. Whether you do direct mail, cold calling, SMS, PPC, TV, whatever it might be, whatever you can stick with the longest, just pick that. If you're going to start direct mail 1 month and then you're like, oh, I'm not getting any results, you give up, you do cold calling, it's not going to work. You do cold calling for a month, you give up, and you say, you know what, cold calling doesn't work, I'm going to start doing SMS, then nothing is going to work. If you're going to just figure out what works best for you based on kind of, your personality, your budget, your time commitment, and then plan out to do that marketing for at least 4 to 6 months at a minimum. Stick with it and then track your numbers, which we'll go into a next step. But any questions on the marketing side of it before I move forward? Well, thank you, Clint, for posting that. I appreciate it. Any questions on this, guys? Just so I can continue moving forward on this. Cool. All right. So now you've sent out your marketing pieces. You're starting to get some leads coming to your business, whether you're doing inbound marketing, whether you're doing outbound marketing. The next step of the next deal model is you've done the data, you've done the marketing. Now it's the sales side of it. You want to convert those leads into deals. That's what we want to get into next. So some of the questions that you want to answer is, okay, what system should I use to capture my leads? That's the first thing. As your people calling in, texting you, whether it's coming from your website, whatever it might be, okay, how do I capture the information? What information should I be capturing? How do I talk to motivated sellers? How do I automate my leads follow up? Like, how do I follow up with them? These are some of the questions you want to answer as part of your sales pillar of your real estate investing business. You want to use a system that's repeatable, scalable, automated, and stores communication log. These are like the basic things that you want to start out with. And we put together like some system that people typically use. Pen and paper, that's honestly what I started out with when I was starting out. I was just doing some direct mail, send out direct mail, and I would have a notepad and a pen. It was repeatable. I could do that, but definitely not scalable. As I started getting calls from people, they wanted to be taken off the list. They wanted to, when I was driving, they would call me. There was no way for me to keep all that information organized. I could not automate it. I could not store the communication log. And then, naturally, then you move on to the next technological, step is, use Google or Excel sheet. It's repeatable, it's scalable to some extent, but it's not going to add any automation. And then you're not going to be able to keep any communication log. The next step is, once you feel like you're serious about the business, and then, you want to scale it, you want to have a business that's scalable, you want to start investing in some CRM. Again, it doesn't have to be REsimpli. It could be any CRM, whatever, you guys feel comfortable with. But the goal is, it should be repeatable, that you have a system that day in, day out, you can follow the same process every day. It has to be scalable, whether you get one lead one day or you get 100 leads the next day, it has to scale with you. And there has to be some automations. It's really important, automations, and then communication logs. So when you're calling someone, you're speaking with someone on the phone, you're talking to them, sending them email, RVM, whatever that might be, you want to have a communication log of people that you've talked to. These are some of the basic things that you want to have in the system that you decide to use. And at a minimum, this is the information that you want to get. You want to get their name and phone number at a minimum. You want to get the property that they're calling about. And in terms of questions that you want to ask, why are they looking to sell the property? That's the first thing you want to ask them. Once you have the basic information, how soon are they looking to sell the house? So somebody that's looking to sell the house in next, week, has way more motivation. It needs way more time and attention from you versus somebody who wants to sell their house next year, at the end of the school year, for example. How much are they asking for the house? So on $100,000 house, if somebody is asking 110,000, of course, they don't have any motivation. You want to put them some sort of a follow-up campaign versus somebody who's asking for $100,000 house, they're asking 20,000, way different motivation. You want to give them more time and attention. Is the house occupied or vacant? Again, if the house is vacant, everything else being equal, they're going to have more motivation. They have a house sitting vacant that they're paying taxes on, utilities and other things. They have holding costs versus a house that's occupied. What's the condition of the house? Again, if the house, they just breeded the house in last year or two, completely different motivation versus somebody, we got a lead, I think last week, where the seller hadn't even seen the house for like 10 years. They were living in, I believe, Alabama or Arkansas, and they hadn't even looked at the house in 10 years. So way different motivation level versus somebody who said, hey, I put 50,000 into the house 6 months ago, and I just want to sell. I got a job out of town. So, and what lead source did the lead come from? So if you're doing different marketing channel, or if you're using the same marketing channel, but using different lists that you're marketing, it's really important for you to figure out was it your direct mail that got the lead? Was it the cold calling that you got the lead from? Or if you're just in direct mail, was it the utility shutoff list that got the lead? Or was it the absentee list, vacant list that got the lead? So these are some of the things that at the minimum, you want to have this information as you go about, capturing the lead. So again, this is what it looks like in REsimpli. I'm not going to go deep into this, but this is kind of the information you can get. And then the next thing you want to do is you want to start analyzing. So if once you have that information, a very standard, like we use this in our business, very, very quick information for us, pre-qualification for my lead manager in Philippines to start making offers on is 70% formula. So if you have ARV of 100,000, I'm going to use actually 250 right here. So if you have an ARV of $250,000, we take 70% of that. So we get 175,000, then we take out the repair number. So, if we don't have the information available, somebody's calling, we just take depending on the house, depending on kind of information we have, we take anywhere from 10 to 20% just off the ARV. And we use Zillow and a couple of other online sources just to get ARV. It's within the ballpark for our area to just, based on that. And then if we're going to wholesale the property, we'll take another 15,000 or whatever, 10, 15,000 off, and then we'll come up with our maximum offer. So just to get started, like this is how we analyze in our business. So we'll say, all right, our offer is going to be in the range of 120 to 150, for example. If they say, no, wait, I want $200,000 for this house, then we're not even wasting our time. Or if they say, I have a mortgage of 200,000 on this house, then there's no point wasting our time or effort on this property because they just want way too much. Or if the mortgage on the house is way more than what we would be willing to pay, then at that point, we just, put them on a follow-up campaign and then follow up with them later on. So, and then, if we have something that we go look at, and, the numbers are pretty tight on it, then this is like, we'll use like a more advanced calculator. We'll put in the exact numbers, how much our repair cost is going to be. Then we go in, we'll calculate based on the project duration. Are we financing the deal or am I using my own money into the property? What's going to be our purchase closing costs? It's way more in depth, just to give us a little bit more accurate number if we're off by like a couple of thousand here and there, just to make sure that, we have room to buy this property. So, but, as you analyze this, the important thing to keep in mind is people buy from people that they like. You could have, we've been on the wrong side of this where, my acquisition manager has gone on an appointment. We've actually made a higher offer than our competitor, but just we could not build that rapport with the seller and we lost out on a deal. It was just, we had it happen to us a couple of weeks ago. My acquisition manager went out. She didn't do anything wrong. She, we followed John Martinez in our business. She followed the same thing, but the seller just, happened to just like somebody else better. We offered, no joke, $110,000 on the property. We were willing to buy. We went a contract. We went with a contractor. Just for some reason, the seller did not feel comfortable sending to us. Cash deal. They sold it to our competitor for about 80,000, and we saw that deal come out to us, as on their buyer's list for 90,000. They ended up wholesaling it for about 110,000 to someone. We didn't buy that, but it was just crazy for us, like how accurate and how true it is. You could offer more money to someone, but if the seller for some reason doesn't feel comfortable, they just don't like you, whatever the reason might be, you might have said something. It could be like something very, very subtle. But just those are the things you want to keep in mind when you go out in appointments, that the people are going to do business with other people that they like. It's true for motivated seller. It's true for us. If we go to buy a car, we're getting a deal from a Toyota dealership. We're debating between Toyota and Honda, for example. We go to a Toyota dealership and then the salesperson is just completely not professional, and then just, has not paying attention. We go to this Honda dealership and then the person that we're working with is extremely professional, just, more presentable, just, we build that rapport. So just simple things make a difference, because it happened with us in a couple of weeks. Just reminded us, you could have the highest offer, but just if the seller doesn't like you, they're not going to accept the offer. You can't force somebody to accept an offer. So something simple to keep in mind. These are some other things. Just always be positive, right? If somebody says, hey, my house, I haven't taken good care of the house, say it's okay, it happens. That's what we're here for. We'll take care of the house, or we'll make sure we rehab it. We will, so it's something, be honest, be empathetic. If your goal is to rehab the house and sell it for a profit, just be honest about that. Don't try to tell the owner that, hey, my family and I are going to move into the house. Just be honest. Like, that's what we do in our appointments. You're not going to get every single deal, but when you go in, be honest, your competitors are also going to appreciate. We never say, anything bad about our competitors. We know the ones that are going out an appointment. When the seller calls us, they say we have a couple other people coming in. We tell them, hey, the other people that are coming in, they're great. They say the same thing about us. That's kind of how you want to do business. Be empathetic. If the seller is talking to you and says, for example, hey, I have to take my dog to a vet, just be empathetic. Say, hey, I'm sorry to hear about your dog, or, they say something about your family member or whatnot. Just show some empathy. People are going to appreciate that. Be confident. If you're making an offer, just come across as confident, just tell them, yes, we'll take care of it. Or, if you're not sure, just say, hey, I'm not sure about it. Let me check with my contractor, or let me check with my, agent, or let me check with my associate. Just, come across as confident, be courteous, and, be consistent. Like if you said you're going to close it in 7 to 10 days, just be consistent with that. When you talk to them first time, you say, I'm going to close it in 7 to 10 days. Next time when you call them, you say, hey, our process takes 30 days. You call them, a week later, you say, hey, we can close in 15 days. The simple things that, if you have different people from your team talking to the seller, but they're all saying different things, the sellers will pick up on those things, and they will get, just wary about kind of different people saying different things. And then be prepared, something as simple as when you go on appointments, always have a contract in your car. If the seller is ready to sign the agreement, just have it in your car and say, hey, let me just run my number, sit in the car. If you need to run your numbers, have the contract and then present it to them. If not, just leave the contract with them. It's something simple. It's a simple thing, but leaving something tangible makes a difference versus making an offer on the phone and saying, hey, I'm going to offer you 120,000 versus having something in writing and saying, here's an offer of 120,000. You have 48 hours to accept it. Let me know what you think. Again, just even if you take it out of the context of a motivated seller, if you go on, you're looking to buy a car, I'm going to go to the example of buying a car, and you have a salesperson said, hey, yes, if you buy the car in next 48 hours, I'll honor the price of 40,000. Versus somebody gives you in writing, hey, here's a written, price of 40,000. You can come back within 48 hours and buy the car for 40,000. Just having something intangible, something in writing is going to help you kind of just, have like just a little bit more confidence in your offer. And then just a pro tip, especially when you're starting out, go on as many appointments as possible. Just a law of averages. Sometimes, if something is a little bit on the fence, go on appointment. If that's especially starting out, there's so many simple things that you will learn about the house. Kind of, you'll start feeling more confident on how to talk to seller just by going on more appointments. I remember when I started out in the business, I used to go on all the appointments myself. And then where we buy houses in Northwest Indiana, a lot of houses have, basement. So I started out, I would go into the house. I remember a couple of appointments. I just looked at the main floor. I completely forgot to look in the basement. And, missing out on a basement could be like $20,000 to $40,000 expense for us, depending on how bad the basement is. Especially, in our area, we've noticed like you can have foundation issues. So, and then, once I missed that on a couple of appointments, then I made a process around it. All right, I made a checklist. I have to check the appointment. And then I might forget about something else. Oh, I forgot to check the gutters or soffit fascia. Then I would just keep adding that. So that's where it comes in. Just go on as many appointments as you can. You're going to start feeling more comfortable talking to motivated sellers. You're going to have a process built around kind of, what to look for in a house. You're going to start noticing some other things about the house that you might not have noticed in your initial couple of appointments. All right, the next thing is one of the most important things in sales is money's in the follow-up. I mean, I'm sure you guys have heard it. It's a cliche. It's a cliche because it's true. 80% of the deals are going to come from follow-up. I mean, we noticed that in our business. We noticed that across other investors that are using REsimpli, looking at their data, and they're consistently that most of the deals are coming from follow-up. So, whether you follow up with something, whether you write something on a post-it note, remind yourself to call this lead, once every week, once every month. You want to have some sort of a system to follow up with the lead. So what we do in our businesses, we do drip follow-up. This is what it looks like. At a minimum, you want to follow up with leads once every 30 days. Again, don't make it too complicated. Keep it very simple. The whole point of the drip campaign is just letting the seller know that you're interested in buying their property. Just keep it as simple as that. Again, I'm going to go back to the example of a car dealership. Let's say you're in the market. You're not even in the market to buy a car, but you get this this postcard from this Honda dealership once a quarter, right? It's just, hey, we have the sale going on. We have this, New Year sale going on. You can get $1,000 off. Then they send you another one. In April, we have a spring sale going on. You can get $1,000 off. It's basically the same thing. You're getting it once a quarter. You're not even in the market to buy a car. You look at it toss it out, and then let's say a year or two later, you are in the market to buy a car and you're deciding between Honda or Toyota. Just naturally, you are gonna think about that dealership that's been mailing you once a quarter, just staying on the radar. Think of drip campaign the exact same way. All you're doing with the drip campaign is you're staying on a seller's radar, just so that whenever they have the motivation to sell, whenever they are ready to sell, they're going to call you or text you and give you an opportunity to make a fair offer. That's all we ask for when we are sending drip campaigns. We don't try to be aggressive. Basically, the intent for us is, hey, we talked about your property a while ago. Just let us know whenever you're ready to sell. We're still looking to buy houses in your neighborhood. We'll send them, we'll alternate between calling them, texting them. If you have their email address, we'll email them, and then we'll drop a direct mail, especially if the initial drip campaign, if the initial contact came from direct mail, and then we were trying to call them and text them, but we're not able to get hold of them. It's a simple thing. Just send them a postcard or a letter. Makes a big difference. So again, just the important thing is you follow up with leads once every 30 days, just letting them know. You don't need to overcomplicate, just letting them know, hey, Mr. Seller, are you looking to sell your property? I'm looking to buy more properties. I have some cash available from a property that I just sold. I'm looking to buy properties. Are you still interested in selling? That's it. If they are, they will contact you, but your goal is to just stay on their radar. So that's it about sales. Let me see if there's any questions. Cool. Devante has a question. How do you accurately track if a specific list is working absentee and REsimpli when you're in multiple? Perfect. That's right on cue. All right. So the next part is what is and what is not working. So that's the last pillar of your a successful real estate investing business. That's the tracking part of it. There's a lot of investors that are good at pulling the data, doing marketing, and doing sales. But this is where you really, really, really start separating yourself. And this is where we notice, you can, think of it like this. For us, for me personally, the goal is not necessarily to have, $1 million in revenue. That's not the main goal. The goal is, I'm going to start out with, okay, how much net income do I want to have? Would you rather have $1 million in gross revenue, but only have a net income of 50,000 after you paid, all the expenses? Or would you rather have a business that only generates, 800, 900,000, but you can net about 300 to 350,000? So that's kind of why it's really, really important to start tracking what's working and what's not working in your business. All right, Jason has a question. Anyone willing to swap drip templates they use? I've got 40 templates, but I need some more, and thinking them up is, so Jason, there's some that are added in your account. If you're using REsimpli, you have like 7 or 8 that are added in your account. You can start out with them. Again, I would not try to keep it super, super complicated. Just, the main thing is if you have a landline, then you don't want to text them. Then your drip would be built around just like calling them or sending them direct mail if you have their address. And if you have their mobile number, then you can call them, text them, send them RVM, direct mail them, and if you have their email address. So just start with that, and then you kind of grow from there. The message remains the same. The situation changes. So you're going to have some people that call you. You have no information. You just have their phone number. So that's a different drip campaign versus somebody that calls you and give you their name, and your messaging is the same, but instead of saying, hey, Jason, you called us about 123 Main Street. Are you still interested in selling? Because you don't have their name, and address, you're going to say, hey, we missed a call from you. Do you have a property to sell? It's essentially the same message, but depending on how much information you have and what situation they're in, you're tweaking the message. Somebody that misses an appointment, it's a different initial couple of messages are different, but then you just basically put them on the same follow-up of, hey, we're still looking to buy the house. Do you have a house to sell? It's essentially the same thing. I can share with the ones with you, the ones that we use in our business, but notice like it's the same message, but just different situation, different circumstances, how much information we have, we tweak it based on that. So more than happy to share that with you. Cool. And, I'm sure you guys have heard what gets measured, gets improved. So really important to start tracking your number. For me in my business, literally, I tell you Tuesday, 10 to 11 o'clock, I have my time blocked in my calendar where I just review the financial. So I review the financial for all my businesses and even my personal kind of net worth. That's all I do. I look at, okay, what has changed in last week. I look at my personal budget, where am I spending money? I look at my business, where are we spending money? And there's like so many things you'd notice. Like you might notice that, you've been paying for some marketing that's not working, or, you might notice that this marketing channel that you've been spending only $500, you didn't expect to make money so quick, and you've already closed on a $50,000 deal. So I do that every Monday, 10 to 11. I have time blocked. Just, it's basically an appointment with myself, and I'm reviewing my financials. And then from 11 to 12, just following up to that, I have an appointment with my accountant. I just go through everything and just, basically walks me through, hey, this is working, this is not working. He'll have some questions. We'll go over that. Just, at a minimum, you want to do that minimum on a monthly basis. Just review your financials. Just go through and see what's working, what's not working. And, you want to start tracking, analyze them, right? On a business point, you want to start. So think of it like, let's say if you have 100 transactions in your month, you want to start tracking them. Where did you spend this money? Again, you can do all of this in REsimpli. You can tie it to different campaigns, different properties, and whatnot, but then analyze them. Did you spend money on direct mail? Did you spend money on PPC? Did you spend money on pay per lead? Like for us, I'll give you an example about our business. So we do pay per lead. I've talked about this, in a couple of other calls. We do pay per lead. We started out with need to sell my house fast. We started out with fast home offers. Our goal was, okay, we're going to spend money on these. We're going to track our numbers. So we spend money on these two marketing channels. Fast home offers, we spent about $10,000. And again, we had budgeted $10,000. We said we're going to spend $10,000 and see how much return we get, and then we'll make our decision. And we had separate campaigns set up. We spent $10,000. We looked at our numbers. We said we didn't get any deal out of it. We ended up losing $10,000. We stopped it. Need to sell my house fast. We noticed we ended up getting 2 deals. We said, all right, this is working. Let's just double down on it. But I was able to make that decision based on actual numbers that I had. If I had not been tracking that, let's say if I were just tracking them together as pay per lead, I might notice that for every dollar that I'm spending, I'm making $4, but I might not realize that I have these $10,000 that I'm spending, which is not making any money, but this other $10,000 that I'm spending, it's actually making me 7x or 8x on my money. But when I'm putting it together, I'm still making decent money, 4x on my money. But if I take this out, my return actually goes to 8x. So those are simple things you want to notice. Like again, cut out any losing marketing channels. For us, example recently is we cut out fast home offers and double down on the ones that are working for us, which is need to sell my house fast, and then just keep repeating that. You see, there's a question. Oh, Rick, I can get into that about adding another market. So we can get into that. Let me just go through this. Then I'll answer that question for you. So some of the things that you want to track is, okay, how many leads did I get from each marketing channel? Let's say if you do direct mail absentee list, you want to look at how many leads did you get from that? What was your cost per lead? So if you spend $1,000 sending direct mail to your absentee list and you get, let's say 100 leads out of it. So your cost per lead is $10 per lead. You spend $1,000, you got 100 leads. You spend basically $10 to get a lead out of it. And what's your cost per deal? So now let's say you spent $1,000, you got 100 leads, and you ended up actually closing on one property. Again, this is a very simple example, but let's say, those were the numbers. So you spent $1,000, got 100 leads, got one deal, and then you close on the deal. So for the $1,000 that you spend, you got one deal out of it. So your cost per deal is $1,000 to get that one deal from that specific campaign. How much money did you spend on that marketing to each list? So in this case, $1,000. How much money did I make? So let's say from that one deal that you got from spending $1,000, you made $10,000 from it. So now you made $10,000. So your return on investment for that specific list is $10. So every dollar that you spend on that, based on the data that we have, you made $10. That's a very simple, even number example, but you'll be surprised once you start noticing, once you start tracking your numbers, you will start realizing, wow, there is one marketing channel or one list that's way outperforming everything else in my market versus the one that I was thinking was going to perform the best, but it's not. But there's this other list that's absolutely crushing it for me. So that's what's really, really important to start tracking that data. Couple of other things to do is like set some goals for yourself, or some sort of like a challenge for yourself. How many deals you want to do, how much revenue you want to get from it, and really important is how much net income do you want to get from those deals. So a lot of time investors talk about the top line number, which is your gross revenue. Hey, I did $1 million business. That's not the most important number in the business for me, in my opinion. The number that's most important, how much money did you actually make? Okay, if I ask you guys, would you rather make $1 million in gross revenue and only have $50,000 left, or would you rather, have $800,000 worth of revenue but net 250 or $300,000 from that business? I would always choose the higher net profit number. So it's important to set a goal for yourself of how much net revenue you want to have, and track it. If you want to have, like for me in my business, I'm doing about, over, I think slightly over 50% in net revenue in my business. And that's the goal I want to have. That tells me I'm running a very lean and efficient business versus if I had 30%. So, start out with about 30% and then see, and then just kind of almost force yourself to see, do you have any unnecessary expenses in your business? Do you have maybe too many people on your team? Maybe do you have, some marketing channels that you're running in your business that you don't actually need? Maybe you're losing money on it, or you're making like, you're spending $100 on it and you're only making $100. So it's a wash. You don't really need, because that's your actual cost. There might be some other overhead that's not directly allocable to that specific marketing campaign. So those are the numbers you want to start looking at. And then, again, like this is, for example, it's an example of direct mail. How much money did I spend on that campaign? How much money did I make? How many leads did I get from that campaign? And how many offers? What's my conversion KPI? Again, it's a little bit more advanced on the conversion KPI, but at a minimum, you want to track how much money you're spending, how much money you're making, what's your cost per lead, cost per deal, and what's your ROI, right? Again, very, very simple example. If you spend $1,000 marketing to one list, you get only one lead. Let's say you only get one, you end up closing on it, and you end up making $10,000. You have 10x ROI on that. You spent your cost per lead and cost per deal is going to be same, because you have one lead and one deal, you spend $1,000. However, you have another marketing channel that you spend $1,000 on. Let's say you have absentee list, $1,000, one lead, one deal, you got 10,000. You have your vacant list. Again, for this example, you spent $1,000, you got 100 leads out of it, you got 0 deal, and then you have no ROI on that. So you want to look at the end of the day, the most important number to look at is the ROI, right? I mean, you want to look at over time, you'll all flush out, like the more deals you have, typically you'll have, the more leads you have, typically you have more deals. But at the end of the most important number to keep track is the ROI. For every dollar that I put in for this specific marketing campaign, how much money am I making from that campaign? And then these are some of the other things to analyze, like how many leads, appointments, offers, and contacts do you have? Where are your leads coming in from? So every Wednesday I have a call with my lead manager. We'll go in, we literally go through, hey, where did we get all the leads? So every single lead source we click on, I look at every single lead. Okay, what happened with this? What happened? So, on a weekly basis, we get about 50 to 60 leads. So we go through every single lead on our call. I review the notes, make sure everything looks good. And, that's kind of how we're making our decision based on, okay, what's working, what's not working on a weekly basis. And then for your team, when they're making calls, if you have a team, like keep track of how many calls they're making, how many people they're connecting with, what's their average call time on a call. So, if you noticed last week, people were on a call for like 5 minutes on average, but now all of a sudden that dropped to 30 seconds for one person, but for everybody else, it's staying at 5 minutes. So, there's something that's like sticking out for that one person. So you want to kind of look into that. So simple things, but you want to keep track of that. Cool. That's basically it. That's what I do in my business. Start with data, from data, move on to the marketing, then move on to the sales side of it. And tracking for me, maybe it's just my background. I come from accounting background. But it's really important for me to kind of keep track of the numbers. So it just, for me, brings everything together. I want to have a very highly profitable business versus have very high gross revenue and not have enough net revenue in my business. So that's it, guys. Any questions, thoughts, or feedback on this? So what we want to start doing from next week call is we want to start breaking and deep diving into each of these. So next week we'll start out with the data part of it. What we're going to do is I put together training on how to make sure you never miss a prospect in your marketing. So it's built around how to like stack your list, how to pull all the data together. And if you're doing different marketing, RVM, SMS, cold calling, direct mail, how to make sure that there's no prospect that you're missing out, how to start with the least expensive marketing and then go to the most expensive marketing, if that's kind of what you're doing. So we're going to, and then, we're going to do 1 week data, marketing, sales, and tracking part of it. So any questions or thoughts on this, guys?
Hey,
Awesome,
Sharad.
cool. Yeah, go ahead, man.
Hey, it's Devonta. Just to touch back on the question I asked, as far as like, how do you specifically like track the list when you're in multiple markets?
Yes.
So I'm just trying to get an idea. So let's say I have like I'm doing an absentee list for 2 different markets. So I'm trying to figure out, how do you accurately track that? Like, do you have to have two different phone numbers for them?
Yeah, 2 different phone numbers, basically. Yeah. So again, like a phone number is only dollar per number, but honestly, that's probably going to be the best dollar you're going to spend, in terms of capturing the ROI. So let's say if I have this, I'm going to use this as a direct mail probate list. Let me call this my probate list. Just going to use one of my markets, Hammond. Right. And then let's say this is my other probate list, but this is probate, and this is my other market, Maryville. Okay. And then I'll just
you're not sharing your screen.
Oh, I'm not. Sorry about that. Oops. Thank you for pointing that out. Cool. All right, you guys can see my screen now.
Yeah.
Cool. All right. So this is what I'll do. Like, let's say if I'm doing direct mail, same lead source, but I'm targeting different market in this case. It's the exact same list, probate, but I wanna test out whether it's the Hammond market or the Maryville market that's working. So I would just call it, probate list Hammond, probate list Maryville, and I'll send them, this list, this phone number. I'll send out all the mail to my owners in Maryville. This one I'll send out to all the owners in Hammond, and then essentially I'll start looking at as the leads start coming in. I want to go right here. Once I have leads come in, like this is the data that I want to look at. This is like kind of what I want to look at. So like I don't have anything in Maryville, but if you look at this, let's say if you combine everything together, right? You send direct mail. Let's say in this case, you ended up spending $85,000 on it, right? And you have, again, it's a demo account, but you made $706,000. On very high level, it's like, this is awesome. For every dollar that I'm spending, I'm making $8.23. So you want to keep doing that. But once you go to the next layer of it, you notice that it's actually the probate list. You only spend $47,000, but you made $626,000. So just on the probate list, you're actually making $13 for every dollar that you're spending, right? So what that does is, now that you have that data, so let's say you're looking to expand it to another market. You have this data that hit probate list, absolutely crushed it for me in my market. So let's say from Hammond, I'm going into the Chicago market, right? So now with this data that I have available, I'm just going to start with the probate list and just target people on my probate list in Chicago, because I have the data to prove that, for every dollar in one market that I spent, I made $13 on it. And if I have all the other lists, I spent $37,000, I made 79. I'm like, you know what? For every dollar that I'm spending, I'm making $2. There might be some other expenses that I have for direct mail that are not directly, that I'm not allocating this. I might have a call center. I might have, people answering calls for me. I might have data costs that I might not be allocating. So I'm like, you know what? It's not really worth it. I'm just going to, save this $37,000 and actually double down on this and see if I can expand this. And as long as I can make, 10x or more, I'm like, you know what? Just keep doing. I mean, for every dollar that I'm putting in, I'm making this money. And that's how you can start looking at the data.
Gotcha.
And then you want to look at this on a weekly basis, right? I look at it on a weekly basis, but I would say minimum look at it on a monthly basis. There's going to be so many things you're going to start covering about your business. They might be like, oh wow, I didn't even believe like this was going on in my business. Like I was spending this money on, Facebook marketing, for example, and I'm like, wow, this I didn't even realize that I haven't made anything from Facebook because overall I'm making, this $5.33. So you'll be amazed, like some of the investors that I've talked to in Mastermind, um, they say, I'm making this much money, I'm getting, but if you ask them, okay, how much are you making from specific campaign, or, what's your return on it? They have no idea. So
Gotcha.
at a minimum, if you look at your marketing, you might say, I spent 170, $37,000. I made 734. You're like, all right, every dollar that I spend, I'm making 5X. Just keep doing that, right? And you might say, hey, let's just keep our Facebook going. Let's just keep our direct mail, cold calling, everything going. But then when you start looking at kind of, if you want to really have a highly profitable business, you got to start looking at these things. You got to start looking at, wow, I didn't even realize that I spent $50,000 on Facebook and I didn't make anything from it, right? And they're like,
Right.
I could have made the exact same money without spending this 50,000. But sometimes you got to spend the money to have the data available. But if you're reviewing it on a monthly basis, what you can start doing is, you might spend, let's say, 10,000 the first month. Like, wow, we didn't get anything from it. Can we tweak something? There might be something very simple that you can tweak in the business, and you might actually end up making money from that. So that's why it's really, really important to start reviewing it. And just especially for marketing, set some budget for it. Like for us, what we did with Fast Home Offers, what we said, all right, we're going to spend about $10,000, which is about 3 months of budget for us, and see if we get anything. That is enough data for us to see
Right.
if we're getting something from that. If not, then it's okay if we end up not getting anything, but at least I'll have peace of mind knowing that, hey, we tested it. We have the data to prove that it did not work, versus trying it out and not knowing whether it could have, or it could have worked or not.
Right. See, that's sort of the problem I had. I had like both of my markets channels like combined, and so I'm sending text. So I'm not able to specifically tell
Right.
which list is working because it's all
Right.
combined together.
Yeah, I mean, so yeah, that's another thing. It's not just the ROI, because for texting, what's going to happen is, it's so cheap to do texting that your ROI, even if you get one deal, it's always going to be high. But then
Mm-hmm.
the question is, for you, the important thing is, hey, do I really need to spend 500 texts a day, or could I still have gotten that deal but just sending only 100 texts per day? You know what I mean?
Right.
So
Right.
that's where you start. It's not just about the money, it's also about the resources. You know, you didn't really need to spend that 400 texts, because you're noticing, let's say, if you have that data over 6 months, let's say you close 6 deals and you're spending 500 texts on the surface, it looks really good. You're closing a deal a month. This is fantastic. But once you start breaking it down, you might notice something really, really interesting, that every deal that you've closed on has been a vacant property. It's just something simple, but you might notice that every single property that you've closed on is a vacant property. Then you know what? I'm just going to target to market vacant properties. And then instead of 500, you might only have 100 texts that you're sending every single day. And then you have a
Right.
way more efficient business. And then it gives you resources. Now that you have that data, let's say you're in one market, Chicago. If you have that data, you can say, all right, I have the data to prove that in Chicago, the vacant list is working really well. And let's say you decide to go into the Wisconsin market, for example. If you have the data of knowing that my vacant list is absolutely working, I'm getting one deal per month consistent basis. When you go into Wisconsin, you would want to start out with a vacant list before you do something else, because you have the data. It's like for us, if I was ever going to expand into another market, I'm going to go with need to sell my house fast if I was doing pay per lead, because I have the data to prove that it works for me in my market.
Gotcha. Thanks,
Sure.
man.
Yeah, absolutely, man. Cool. Awesome, guys. Any other questions, any other thoughts on this kind of, any feedback on how we are planning to run these weekly calls on, like, breaking down into data, marketing, sales, and tracking? So this way we cover kind of the four pillars of successful business. Any thoughts or feedback on that? Anything else we can do to kind of improve these weekly calls for you guys? Let me quickly check on our Facebook group also. there's any questions or anything that I missed. Cool. No, all good. Are you going to post the recording somewhere after the call? Yeah, guys, we're going to be posting. So if you are, let me actually copy this right here. All right. So if you go to this link that I put in the chat, it's a Facebook group. So we did the recording is being streamed live. So you are going to have the recording available there. But if you need like a Dropbox link or anything, just send us an email at support@REsimpli, and then we can send you a Dropbox link. But the recording is going to be available in our Facebook group. Thank you, Courtney. Awesome, man. I love your stuff on YouTube. I love your energy. Yeah. Cool, guys. Thank you so much. I appreciate this was a great call. I'm excited. Next week call is going to be on the data side of it. I put together a great training. I'm excited about kind of what we're going to start doing, implementing in our business. So I went through on exactly what we're going to be doing in our business, go from like the least expensive marketing to the most expensive, and then kind of how we're going to, once you have the lead, how we're going to scale our business from there to make sure we don't have any prospects that we're missing. Hey, Tatsuar, can you make a note that reach out to Isan or Danielle that we have some people on the Facebook group that the request it's been pending for a few days. So if they can approve people that are that have requests pending for the Facebook group, you can do that, please. Cool. Awesome, guys. Thank you so much. I appreciate you guys being on the call. Looking forward to the call next week. If you have any questions in the meantime, please, send us a message on the Facebook group or send us an email at support@REsimpli.com. Thank you, guys. Have a great rest of the week.
Thank you. It was a great call today. Thank you so much.
Thank you, Jasmine. I appreciate you got value out of it.
Yeah, absolutely. Bye-bye.
Bye.